Polkadot. Today we're going to cover the fundamentals and the technicals. If you're short-term trading or long-term hodling, today's video is one you do not want to miss. And if you like today's video, hit the like button, hit the subscribe button, and hit the bell notification. And if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies for over 15 years, and now I bring that knowledge and wisdom to crypto. I was featured in this best-selling book back in 2008. Awesome book, High Probability Trading Strategies. We want to use that knowledge and wisdom. So let's jump in to CoinGecko. I always use CoinMarketCap or CoinGecko. Polkadot, we're looking at some key information. This is what I look at. Well, first of all, we want to see that it is number 9 on the ranks in terms of market cap. So the top 10 project in terms of market cap. Prices today is $14.84. Can't believe it. It was quite a lot higher not that long ago. Market cap is 14.9 billion. If you ever wonder what market cap is, it's just literally the total tokens in circulating supply, the total tokens that are available multiplied by the price. That's what it means. And let's just look at some of the price data on the right-hand side. On the right-hand side, all-time high. Polkadot's all-time high was just under $50. So you can see that it's 70% down, 69.9% down from its all-time high, and its all-time low was $2.70 back in 2020. So let's just jump into Polkadot's website, right? Polkadot is live. Polkadot development is on track to deliver the most robust platform for security, scalability, and innovation. Right, so they're doing some big things in Polkadot. So powering the Polkadot network, they got their own, it's just making it easier for you to build your own blockchain. That's the main thing. And I've downloaded their light paper. They have their white paper and light paper. So if you go to the top right-hand corner of this website, top right, you'll see light paper and white paper. White paper is really in-depth and technical, but the light paper is easy to read, it's visuals and so on and so forth. So when we jump in, an introduction to Polkadot. Let's just read the high level. Polkadot empowers the individual against much more powerful corporate and state actors. So it's making it cheap for the individual to build their own blockchain. That's the main thing. Less trust because we're focused on the code. That's the beauty of the blockchain. More truth. This is a blockchain unbounded. So it's aiming to really make it easier to access the blockchain. Many chains, one network. The one that I want into, blockchains that grow. The thing that I want to see, future-proof your blockchain with forkless upgrades, community powered. But the thing I wanted to show, because a lot of you I know are also invested in Kusama, is here you go, look, play with chaos on Kusama, Polkadot's wild cousin. Yeah, so just a quick reminder, Kusama is an early, unaudited and unrefined release of Polkadot created to test the network technology and economic incentives. So basically, Kusama is like the test network for people that are looking to build on Polkadot. So you can make all your mistakes on Kusama and then migrate over. So that was some of the, just kind of quick reminder on Polkadot. Powerhouse project, top 10. Like, when you're a top 10 project, you have to be a powerhouse, or you have to have some extraordinary marketing, which is like Dogecoin, right? Dogecoin marketing. So now let's just jump into the technicals, right? Let's see what's happening from a psychology standpoint when it comes to Polkadot. So hopefully you're getting familiar with Elliott waves by now. And if you're not, very, very simply, markets have a psychology. Like, it's really the price action. People think, is it down to just the fundamentals of the project? Is it the utility of the token? What drives the price? Well, ultimately it's buying and selling, right? When there's optimism and there's more greed in the markets, price will drive up. It'll be more impulsive. And when there's fear, when there's pessimism, for whichever reason, price will drive down. But more often than not, around 50 to 70% of the time, you'll see this clear pattern of a 1, 2, 3, 4, 5. And that's called Elliott waves, and then ABC corrections, and they tend to repeat, and the market is always contracting and expanding depending. So it's a really dynamic market. So when we looked at Polkadot a little while ago, we saw this count 1, 2, 3, 4, 5. So this is like a macro count. If I just make sure this is nice and clean and clear for you. Macro count, wave 1. And then we look like we're on a macro count, wave 2, this correction. But the correction tends to break down to 3 waves. That's what we're going to focus on. This A, let me just turn this magnet off. This A, B, and then looks like this final C. So we can do some price projections today to see where is the likely end of the wave 2 likely to be. What do we anticipate on a macro level after a wave 2? Quite simply, we expect a wave 3, all-time new highs, all-time new highs. So we know the fundamentals are there. We know the confidence in Polkadot is there. We know it's going to be a big challenger to Ethereum, and its cross-chain is going to connect a lot of the blockchains as well. Faster, cheaper, easier to build, so on and so forth. So and it's Gavin Wood. Gavin Wood is the former, or he's co-founder of Ethereum. So he built Ethereum with the team, and now he's doing his own thing over here with Polkadot. So now let's just look at the micro, right? Because short term, medium term, the technicals are going to play a much more important role than the fundamentals. Fundamentals, 1 year, 5 years, 10 years, 20 years, man, that's going to be the fundamentals. When it comes to technicals, weeks, months, and less than a year, that's when we want to rely on the technicals to make sure we're buying at the right points, high probability points, and selling at the right points also. So let's just focus now on this intermediate count. What do I mean by intermediate count? Well, there's counts within this wave. I said there's big wave 1, but there's this wave 1, 2, 3, 4, 5. And on the way down, there's this big wave 2, but it looks like it's doing a A and then an ABC of a B. And then we're on this final leg of this wave C. That's what we're going to focus on today, this final leg of this wave C. So let's just zoom in, and we're focusing on the pattern today, right? Really focusing on the Elliott Wave pattern. So if I just do this, so it's nice and clean and clear for you. Well, croaky voice today. Have you noticed? I've got like a frog in my throat today. It's probably working too hard yesterday. Let's have a look. What I want to show you is this. Here we go. Boom. Wave Cs tend to break down to 5 waves, even on the downside, right? And wave Cs are impulsive, but it's part of the bigger correction. Wave 2 is a correction, but it's an A, B, C, and that C is impulsive. What do I mean by impulsive? These waves do not overlap. Like these ones are overlapping. You see this overlapping waves? These do not overlap. There's a big space between, and that's what's happening on the downside. So what I'm seeing here is a nice 1, 2. Oh, let me just do that again. Make sure I did that right. Well, 1, 2, a nice 3 or a 3. Let's just go here for now. 4, looks like a 4, and then we should see a final 5. And if that is the wave count, I'm just going to see the intraday data. I'm going to use candles to see if there's any wide bars. Yeah, that seems pretty clean. Because even here you see this nice ABC. That's typical, of a wave 4. And then we should see a final leg down. And that should complete the wave 2 correction where we might start to see the higher highs being made. So now let's just go back here, right? So now let's just do some Fibonacci. So if you're not familiar with Fibonacci, this is the first video that you're watching of mine. I didn't create Fibonacci. Fibonacci has been around for a while. Fibonacci realized there is these amazing ratios in the world, in nature. Even the symmetry of the human face. It was shown this golden mean called 1.618. 1.618 golden mean. Let me just change this to micro. That's fine. Yeah, we want to go micro. There we go. So it's nice and clean and clear. Yeah, so Fibonacci 1.618. Now, what Ralph Nelson Elliott realized in the late 1800s, early 1900s, even with the stock exchanges and the markets back then, is that human psychology applies to the price action. People are buying and selling based on fear and greed, right? Speculation. And that's reflected in the price, right? There's no logic to it, because Polkadot is strong. How can it be so strong? And it's stronger now than it was even a few months ago. But a few months ago in May, it was like $50, right? And it's stronger now. And today's price is what? $14.70. There's no logic, right? There's no logic. It's all about short-term fear and greed, optimism, pessimism, taking profits, and so on and so forth. So it's good to understand that. So now let's just look at, from a psychological standpoint, using Fibonacci ratios. First, let's focus on this macro. So we can do a nice retracement on the macro. Right, we're going to measure this low to this high, and then we'll take a retracement down. So let's just do I'm going to do it from here. But you notice that it lines up on the left, and then boom. And then the numbers that we want. Typical wave 2 correction is a minimum of 50%, 62%, and a typical maximum is 78.6%. So you see we're right at that 78.6%. So we can say we're at that typical maximum zone, right? And we've taken this low to this high to get this zone here. Let me just zoom in like this so it's really, really clean and clear for you as much as I can. And then typically you'll find an ABC correction. And there's a direct relationship. So now we're going to focus on this intermediate count, a direct relationship between a wave A and a wave C. And it's either 100% or 62% or 1.618% of the wave A is what wave C normally is. What do I mean by that? So what we do is we measure wave A and we project it from wave B high, the wave B high. And we'll see this 62%, 100% is going to go out of range. So that's going to be irrelevant. Is the 62% that we want to be wary of. Right? Look how low that is. That's like $8. So that's a really broad zone we've got here. $14 to around, what are we saying here? $8.50. Imagine that Polkadot getting down to $8.50. That would be crazy, but possibly likely. But what we're also going to do is an external retracement of the wave B. Don't worry if you're not following me 100%. It's more we're looking for a price cluster, and this is measuring high probability psychology of the market of what's likely to occur. Right, these two are confirming indicators numbers. So 1.618 is typically the maximum of a wave C low. So boom, boom. So we're going to do that. And now we're going to move on to the micro. So we're going to move on to the micro. There's no other one. I'm just thinking off the top of my head. Boom, boom. Yeah, we got those. There's a couple of other things we can do, but the main one that I want to focus on now is this micro. This micro count, this 1, 2, 3, 4, 5. That can really help us narrow down. Is it likely to be up here, down here? You know, because this 62% is quite far away from this 78.6%. But let's just do the measurements. Let's just see where the projections take us. So if this is a 1, 2, 3, 4, 5, we want to measure wave 1 to 3. Project it forward if this is a wave 4 high. And the typical wave 5 is 62% and a maximum of 100%. I'm going to keep just the 62% because you'll see it clusters over. It overlaps the other 62% of the wave A. So when you have a cluster on 2 degrees of a macro, intermediate, and a micro, then that's a high probability resistance or support zone in this case. Then we're going to do one last one, which is measure this wave 1, projected forward from this wave B, and the most typical relationship from a wave 1 to a wave 5 is 100%. Right? Again, it's in that zone. So we've got a high probability zone on Polkadot. Really, I'm going to draw a rectangle here. Yeah, so we can expect possibly some lower low. So let's just do, so we've done pattern, we've done price. Now let's do time next, time, basic time analysis, right? Because believe it or not, the same psychology that applies to price applies to time also. So we can do a Fibonacci time retracement. We're going to measure the time taken to form this wave 1. And a typical minimum is 38% to 50%, right? So time, this 38%, which is a typical minimum is the 6th of July. Where are we now? Today is the 2nd. So next 4 days, we shouldn't see the completion of the correction before the 6th of July, right? That's quite a broad kind of projection. But then we can also do one other. There's quite a few time analysis elements you can do. I'm just doing the high level simple ones. We can measure how long it took to do this wave A and the wave C. More often than not, the most common is 100%, but the maximum tends to be 1.618, and we can see that's in that zone over here. So now we're likely to see a correction in this zone. So I'm going to just broaden this, even though we've passed this date already. I'm going to broaden this to here, to here. So by or before the 22nd of July, we should see the correction of Polkadot complete. If that's the case, you know, what's going to confirm it? With the first strong confirmation, you know, it'll be going over this swing high, but the really strong confirmation is going over this, or ideally this swing high. If the price goes over this and closes above that with confidence, and then does a bit of a pullback, and then we'll expect to close above the wave 1 high, and then we'll go on to the next step. So now let's just finish with momentum, because momentum can really help us. Let's just jump into the weekly chart. Weekly chart, Polkadot hasn't been around that long. I'm using Binance data when it was listed on Binance. What I want to focus on is the momentum indicators. So you can see that both of them, they're not giving us that much information because they're quite choppy. They don't, but what we can deduce and conclude from this is both of them are oversold below this 25 line. And the fast one, which is this one here, I think this is, check this out, that's the 13. This is the fast one. Yeah, so it's in the oversold zone. So it's probably going to be 1 or 2 weeks in this zone before it crosses over. But more importantly, what's going to give us more important information is what are the momentum indicators on the daily chart. So we can see that it's currently bullish, but you can see that it's turning already. What's likely to occur is that the blue line will cross below the red, and then the blue line will then cross above the red. And at this point down here in the bottom right, if you can see that, if I just double click on it like this, we'll end up probably having the blue line go bearish. Wherever it will go over the 75 line, we'll see. But more importantly, on the next bullish reversal that will look like this over here somewhere, will probably coincide quite closely to this end of wave, what we call an end of wave C of a wave 2. Yeah, hopefully that's making sense to you. So we want to be patient. Yeah, we've got this nice 1, 2, 3, 4, possibly another move to the downside in the $10 to $8 zone. Can you believe that? Polkadot, $10 to $8. And that would be a potential great buying opportunity. And if you're holding Polkadot, if you're staking Polkadot, if you've got Polkadot in your portfolio, this also just help you to go, okay, there might be some more downside movement as a percentage from today's price. That's like, what is that? That's nearly 30 to 70%, 30 to 50% drawdown from where it is today, right? So just be prepared for that. Just be prepared. That might be happening, but then we should expect a recovery. The strength in the project is there. It's just the optimism in the market is not there right now. And then that should really be reflected in the price. So there you have it. Polkadot, powerhouse project. We know that is a top 10 coin, but the current psychology of the market is more pessimism just as a whole space. And a big part of that is probably indicated by Bitcoin and the news and FUD, fear, uncertainty, and doubt. So if you like today's video, like, subscribe, hit the bell notification. Let me know how you're finding the fundamentals and the technicals. If you want me to do more specifics, because we can kind of really dive deep, or if you want me to just gaze over as I am at the moment. So let's finish today on a quote. I pulled out this book on my bookshelf. It's The Winning Investment Habits of Warren Buffett, the world's greatest fundamental investor, and George Soros, who is one of the world's best technical investors from a technical standpoint, which is what we're focusing on both at the moment. So let's read this. George Soros doesn't take risks. To survive in the financial market sometimes means beating a hasty retreat. Warren Buffett, it's not risky to buy securities. In this case, it's going to be tokens. It's not risky to buy tokens at a fraction of what they are worth, right? So Polkadot is still a young project in the grand scheme of things. But is it worth more than $10, right, per token? It's hard to say, but it's been as high as $50. So there's a 70% discount right now from its all-time high. Now, we're probably going to get a bit more of a discount in terms of the price getting down to around $10 to $8 potentially. And if it does, it might be a great buying opportunity. So there you have it. And I'm going to read one more thing. Passionately avoid risk. The master investor, as a result of habit, is risk adverse. And the losing investor thinks that big profits can only be made by taking big risks. There you go. That's what the pros say. All right. See you soon. Like, subscribe, hit the bell notification. I'll see you soon.